Friday. What's up, everybody? Friday morning. Hope you guys are having an amazing day. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. We're going to do what we do each and every Monday, Wednesday, Friday, looking at our four major markets and then identifying an opportunity in a stock of the day. If you're new to the channel, do me a favor. Click the subscribe button and the notification bell so you get the alerts and the updates. Let's go ahead and dive in first with the big picture. Well, you don't get a bigger picture than the S&P. The S&P is our major market, and we talked about this earlier in the week that I would like to see a pullback, down a little bit lower into one of these regions. And the reason that I liked a pullback a bit lower into one of these regions was for the simple fact that we had you need daily pullbacks for opportunities to re-engage trends. And so, it's funny that people tend to lose their mind over the markets pulling back just a little bit, but we've only had a pullback in the last few days of less than 3%. I mean, overall, we're at a lowest point yesterday. We were at about a 2.76% pullback from the high. A pullback into this little wick over wick area would be about a 3.5% pullback on a weekly chart, but I think that that's going to give you a pretty decent entry possibility for some longer term positions. Now, I am going to throw on. I'm not a big moving average person, but I do use moving averages occasionally to see what do we look like on the bigger scale. And what I specifically look for is what I call the bull area, and we refer to this as the bull area. We've been teaching this at Traders Army for a long time. The bull area is the area between the 20-period moving average and the 50-period moving average in a condition of what are called stacked moving averages. And a stacked moving average means that the 20 is above the 50, which is above the 200. So we have stacked moving averages. We've pulled back to the bull area. Now, I'm not saying that I buy because I'm in the bull area, but look at this run that we've been surviving for almost a full year. The markets, occasionally they will dip a little bit below the 50, but they for the most part, on a pullback to the bull area, have been rallying back up. Now, they're rallying back up because they run into quality areas of demand. And so the next thing I'd have to do is take a look at a quality demand area. Now, let me remove these studies here. Looking at this from a pure demand standpoint, I was looking at this little wick over wick area here on a daily chart as something that could become a point of turn if we drop a little bit deeper. That would still keep us inside of that bull area. We might get a little bit greater. We might get a little bit higher than the 50. We may dip a little lower than the 50, but it's still going to be a pretty good opportunity for pullback. So that being said, I'm still thinking that we may come down a little bit more today, because if I look at the 4-hour trend, my 4-hour trend has shifted to a 4-hour downward trend, right? Lower swing lows, lower swing highs. So in my mind, shorts make a bit more sense today, but this is the level we identified on the daily chart. I think it actually makes a bit more sense to look for shorts today. And, that the short that you look for might be just getting below the Globex low. Now, you would normally utilize this and say, hey, that's a demand area. Yeah, but we came really close to that demand area without getting in. And that's usually sets up for a good basing opportunity, especially because it was a prior area of resistance. So I'm going to look for here for a potential breakdown below this line for price to continue to move. I don't know that I would consider this a bear trap because of the basing in front of the level. As far as the supply levels above me, none of the 15-minute supply levels above me are really they're not giving me great hope that there's a phenomenal turning point in there, and I'd be forcing it. I think you got a little unbalanced wick over wick up here, but I like the breakdown below here better. Nasdaq. So the Nasdaq has bounced off of the demand level that we identified on Wednesday's daily market commentary. So hopefully you watched Wednesday's session and caught this demand area. where we bounced off of that level, and we got a really nice run out of that level. Moved almost 300 points off of that, 290 points. It moved off of that level, and before then rallying higher. Now our 4-hour trend is down, so I'm going to remove this line at this point, and I would say that you're still better off looking at shorts on the 4-hour time period. On the daily chart, just like we did with the S&P, we're already come back to that wick over wick area on the daily, and this was this area right here, hence the reason we got our bounce. The next area of daily demand is really down here at about 14, call it 14.4. Somewhere in that 14.4 region would be our next daily demand area. That if the S&P continues to fall, then the Nasdaq may fall as well. And we talked about this early in the week. I talked about this on Sunday night, is that if the S&P and the Russell are working together, we may see a bit more weakness heading into this week, and that's exactly what we wind up seeing. I don't have a great supply area, though, to get short on, on some sort of a rally back higher. As I look at these supply areas, none give me a true strong move away, and so I'm just going to let the Nasdaq go today. No real trade setup for me in the Nasdaq. Crude oil, we did get a breakdown below this line that we were talking about as kind of a descending triangle pattern that was forming. Markets did break below that area, and we did have a contract rollover in here as well. If you missed the trade and you feel like you missed out, don't hang your head. Just get short on a rally back up to this region right here. That would be the next best opportunity in my mind for price to continue to head south in crude oil. And then gold, looking at gold, we are still sitting below our breakout line that we talked about in gold. We did come down and hit off of the little 15-minute demand area. We got that little move away from there to pay you a good solid 2-to-1. So I'm going to remove this one at this point. And our next demand area in gold comes into play down here at 1766, as none of these levels below me are really strong. So keep an eye out for the breakout trade above 1797. But really, we're just faring kind of sideways. So those are our 4 major markets that we look at on a regular basis. I think you're better off on breakdowns in the S&P, breakout upside in gold, and then a reversal trade in crude oil, and then Nasdaq not having a quite as much of a strong market. Let's slide over and take a look at our stock of the day. So rather than talk about one particular stock of the day, which we will get to one, but I want to talk about one particular search for stocks, and that is looking for bull area stocks. When the market is giving me a bull area setup, then the stocks oftentimes are going to give me a bull area setup. And so I've got a list over here on the left of bull area stocks that are worth identifying for potential trading opportunities. And so how do I find those? Well, if I'm going to go to my scan tab here, and you'll see that on my bullish area, so let me load my bull area stocks. I look for stocks that have a price greater than $15 a share. I look for stocks that in which the 50 period simple moving average of volume is greater than 800,000, meaning I've got enough volume to make some trades. Moving average scan, the close is at least 0.01% below the 50 period simple moving average. So price is below the 20 period simple moving average. So price is below the 20. And then moving average scan, the close is at least 0.01% above the 50, and the close is at least 0.01% above the 200. So we can see that price is below the 20, above the 50, and above the 200 period moving average. Now, by being above those 2 key moving averages, we know that price has to be in an upward trend. And by being below the 20, we know that it has to have had a pullback. Okay. Now, if I were to make this scan just one way better, I would put that the 200, the value of the 20 period simple moving average must be greater than the value of the 50 period simple moving average. and the value of the 50-period simple moving average must be greater than the value of the 200-period simple moving average. That's not a criteria that I can use in this particular scanner. It doesn't come up very often, but we want price below the 20, above the 50, and above the 200. Now, when I do that, what that gives me, let me move this back over. My screen is just not quite big enough to see the entire corners. When I do that, I get my list of bull area stocks: Alphabet, MicroStrategy, Tesla, Lululemon, Moderna, John Deere, Facebook, BNTX. Now, by the way, does that mean that all of these stocks are going to rally back up off of because they're hitting their 50? Not necessarily. What it does tell me, though, is that these stocks are in the context of an upward trend and they are experiencing a bit of a pullback. And so that's where you can look for high probability stocks. So the one I looked at today was Albemarle as a potential. Hope I'm pronouncing that right. I don't know if I've ever traded this one. But when I looked at this one, I immediately saw this area of demand. I saw this strong move up. And if I take the trend here, that's a pretty healthy pullback off of that big lower trend. And then if I take this one from here to here, it's about a 50% pullback off of this smaller trend. So I like those pullback areas to those areas where we have a good demand zone. And then that's supported by, throw my key moving averages on here. It's supported by the fact that we're below the 20 but above the 50. Now, if you want to use the actual 20 and the 50, you'll see once I put them on the chart that the 20 and the 50 period moving average. See, this is an example where on Tesla where it's not quite as clean because I don't have as clear of a setup. Lululemon looks pretty good, right? I've dropped below the 20. I'm above the 50 and above the 200. Moderna is another one that looks pretty strong. This one, John Deere, I am below the 20, above the 50, above the 200. My 50 is not really a rising 50. It's more of a flat 50, right? Facebook is actually a really, really clean one from a pure analysis of just looking at bouncing off 50-period moving average. And why does that work? It works because if enough traders use it, then it's got a lot of self-fulfilling prophecy to it, right? And so this is a very common search that I look for when the market is in this kind of a setup or this kind of a scenario. So hopefully you find that useful. But the one that I looked at today was ALB. If you have any questions, as always, send us an email, support@tradersarmy.com. Until next week, everybody, see ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.